Want to double your IRA or investment portfolio every 60 months for a more fulfilling retirement? Investing in real estate has always been one of the best ways to transform anybody's wealth. And what if you can invest in real estate without the headaches of being a landlord? Just getting passive income and wealth growth. Well, my name is Marty Barker, and I am passionate about helping people like you transform their financial future through multifamily real estate syndications. Multifamily syndication is a powerful investment strategy that will allow people like you to own a share of large apartment communities along experienced professionals like me and my team. It's a way to generate consistent cash flow, long-term appreciation, and receive tax advantages as well, all without having to manage the property yourself. So if you're frustrated with modest returns and endless market volatility of traditional investments like stocks or bonds for your retirement account, it's time for you to explore this alternative investment, and this video will help you understand how multifamily syndication works so you too can transform your financial future. Multifamily syndication is the powerful strategy to help you grow your portfolio by owning a share of large multifamily or apartment complexes. I want to cover 4 topics. The 4 things we want to talk about is what is a multifamily syndication investment? How does the ownership of a multifamily syndication work? And how does an investor in a multifamily syndication get paid? And finally, I want to take one of our current syndicating deals that we have and go through the numbers for you and show how our current investors are getting paid on one now. So first, what is a multifamily syndication investment? Kind of encourage you to look at some more of our videos. It will show you how we choose properties to buy. Basically, where we always look for an apartment complex that may not be managed very well, and we can increase the efficiency of how it's being managed and do what's called force appreciation. Once again, I encourage you to look at another video and see how we do that. So let's take, for example, this apartment complex here. Let's say that through our experienced underwriters, we looked at this piece of property. We decided that we can increase the value over a 5 to 7 year hold and have some great capital gains while having passive income at the same time. Let's say our underwriters decide that we would pay $10 million for this piece of property. When we go to the closing table, we generally need 30% for the purchase price, in this case, the hypothetical of $10 million. So we would need $3 million. 25% we need for the down payment because we're going to finance the other 75% or $7.5 million. And that's called leveraging money. And that's one of the tactics that we use to get high returns on a property. And we need 5% for closing cost as well. So investors such as yourself, you can invest along with experienced syndicators like us to purchase a piece of property and get to participate in the high returns on it. Next, I want us to look at how does the ownership of the multifamily syndication work. We're going to use this example once again of a $10 million purchase price. The general partners, that's who we are, generally consisting of a team of about 3 to 5 members. We do all of the managing of it. We have the relationship with very industry-specific brokers. You see, a broker does not get paid when he lists a property until it actually closes. He gets his check at closing. They like to call on experienced investors such as ourselves because they know that they can do everything to get the closing done on the piece of property, can get the loan and so forth. So we have to qualify for the loan. That means that we have to have a net worth equal to the amount of the loan or more. We had to have liquid funds of 6 months of expenses of the property once we purchase it in the bank. So cash in the bank. We have to have experience. They will not give us the loan if we don't have the experience to do this. And we have to guarantee the loan as well. So we also many times or often invest hundreds of $1,000s, sometimes millions of dollars of our own monies along with people such as yourself. So then you would be what's called a limited partner. Limited just means that you would not have to guarantee the loan in any kind of way. You don't have any management responsibilities. That's one reason you don't have any guarantees on the loan, and you have no decision making responsibilities. You have what is referred to as just mailbox money. So you invest. You don't really have any responsibilities, and every quarter you get your money in the mailbox for that. So the division of the ownership, the general partners, people like ourselves, is generally 30 to 35%. Limited partners such as yourself is generally 65 to 70%. So to this point, what I want you to know that the takeaway is that multifamily syndication enables investors such as yourself to pull capital and share risks and earn consistent, reliable, passive income when you join with experienced general partners such as ourselves. Next, I want us to look at how does an investor in a multifamily syndication get paid? So in other words, how do you get your money? How do you make money? First, of course, you have your revenues, rents coming in, application fees, late fees, any kind of monies that come in. You take your total revenues minus your total expenses, all expenses on the property except for in your debt service on the loan. But you take all other expenses and you come up with what's called a net operating income. Then you have to take from your net operating income any your debt service on the loan and any reserves that you want to keep in the bank. We want to keep a certain amount in reserve in case anything comes up on the property, or if we're wanting to make any upgrades on the properties, we would want to keep that there as well. Then we come up with what's would be the total distributions. You take those total distributions and you divide it between the owners. So like I said before, the general partners, anywhere from 30 to 35% ownership of that total distribution, and the limited partners be 65 to 70% of that total distribution. Let's look at next some actual numbers. So let's look at a piece of property that we already own, and the investors that did invest in it. Let's see what kind of returns they're getting. And this is just a normal property that we have. So this one here is Ridgewood. It is in Arkansas. We purchased it in 2019. We paid $5,415,000. We didn't need a full 30% at closing. We only needed 27%. So we raised $1,450,000. That's the actual numbers on that. Our total revenue last year, let's just look at 2024. Our total revenue was $918,992. And our total expenses last year was $401,599, which left us with a net operating income of $517,393. Between our reserves and our debt service was another $321,797, which gave us total distributions last year of $195,596. Now you'll see that that's actually pretty good returns. So let's annualize that. If once again we divide that between the general partners and the limited partners. So as a limited partner, all the limited partners would have shared $127,137, and that would have been pro rata depending on how much each individual investor would have put in to equal the $1,450,000. So you take that 127,137, divide it by the amount that was the limited partners brought in, 1,450,000. That left a return on capital of 8.8%. So that is pretty much what we're averaging right now over the 5 years on this piece of property, 8.5%. So that was a good return. But that's not the only way that limited partners get paid. Also, there's capital gains. Let's use a very conservative capital rate of 7.5. At the time of this filming, the actual capital rate is 5.3, which means actually would sell it for more than this conservative number I'm using, but I want to always show you conservative numbers. That would mean if we went to sell it now at that rate, we'd sell it for $6,905,853. We would have broker fees and closing costs of about $276,000, which would, and our principal on our loan has been paid down about $300,000, which would leave us total proceeds after the sale of $6,929,619. We want to see what our total equity generation is. So we take our proceeds minus what we paid for the property, $5,415,000, leaves a total equity creation of $1,514,619. Once again, you divide that between all the owners. So the general partners and limited partners, the limited partners received nearly $1 million of this, $984,502. You take that and divide it by 5 years, because let's look at the annual return on our investment on this capital gains. So we divide it by 5. We've held it for 5 years so far. That leaves an annualized return of $188,700. Divide that by the investment of $1,450,000. That leaves an annualized return on the capital gains of 13%. Now let's see what our total returns has been if we sold this property right now over the 5 years. So if we remember, we have, I told you that our average returns over the 5 years has been 8.5% on the proceeds. And if we sold it now, we would have capital gains of at least 13%, and which would give us a total returns over the 5 years annualized. It annualizes out 21.5%. And that's on this just 88 units that we have in Arkansas. Once again, this is a normal situation. We've had some that we have went the distance on. We've been closer to 30% returns. So I hope what you see is the takeaway on this is multifamily syndications yield consistent cash flows and strong capital gains, delivering impressive returns. I've probably overwhelmed you with a lot of numbers here, but my goal was to show you how investing in multifamily syndication is a powerful but yet proven way to grow your wealth without the burdens of property management. Our approach is simple. As limited partners, you invest and enjoy the rewards while our experienced team of general partners handle every detail for you. I've shown you one of our typical investments so that you can imagine yourself earning 8.5% returns throughout the hold. And then at the end, you would combine a 13% annualized capital gains with a total of 21.5% annualized returns. These are impressive numbers that really just reflect our proven track record and the reliability of multifamily investing. So there's really no need for you to worry about the vulnerability or unexpected hassles. Our team takes care of everything for you. For more information, click in the link in the description below and I'll send you my ebook. And please subscribe to the YouTube channel and forward this to anyone that you think would help them in their retirement portfolio as well. And lastly, If you have any questions about this video or like to see what we have available for investing, click the link in the description as well. So take the next step. Secure your future for a good, happy financial future for your retirement, and take the next step so that you can continue growing your wealth that you've worked so hard for with your retirement portfolio.